Hello, everybody. Welcome to Monday. The S&P 500 was up 0.17% today. It was an interesting day, actually, because if you look at the broad market, it was actually down. If you look at the small caps, it was down. And really, it's just kind of the Mag 7, the big stocks. And it was kicked off by a deal that Amazon made with OpenAI, $38 billion, gives OpenAI access for 7 years to some of the computing power that Amazon has in their AWS system. And that kind of just made the AI, continued run in terms of all of those different big stocks as far as that goes. And so it was a little bit narrow today. We'll see what happens, as we go forward. But, not a bad day actually altogether, especially for these big indexes, which are mainly driven by these big stocks as far as that goes. So one of the things that, I've been thinking about is just kind of the balance between what's going on. We talk about this, the AI piece, the data center build out, cutting down, interest rates and all these types of things as the positive. You kind of look at it like, okay, we keep talking about some of the things that are happening that are negative, whether that's the tariffs or the deportations or the independence of the Fed or whatever it might be. And really, the market continues to go up. It's sort of like, you take a fire hose and you shove it into, a sink, it's going to overflow, all right, because the drain is not big enough to take all that water in. And right now, a lot of concentration on the negative side is that drain, and just the drain isn't big enough. In other words, the tariff and the deportations and those other things aren't big enough to overcome the positives that are coming in from, the AI trade, data center build outs, and of course, the rate cuts that have been happening too. So, it's going to take either the AI thing shrinking down. So now we're using a garden hose that, where the drain can keep up, and we start to see some waffling for the markets or maybe even downturns as far as that goes, or the drain gets so big, because of tariffs and those types of things that, manifesting into some type of real problems. At the moment, the fire hose is definitely overwhelming that drain. And so that's what's kind of happening now. If you look back in 2022, a lot of those companies did cut back on their data center build outs just because, again, we're starting to see some higher interest rates back then because of higher inflation. And we started to see these companies, pull back because they're public companies. Public companies are trying to push out higher earnings on a constant basis. And so, you can't spend all that money on these different build outs without having some hurt to your bottom line. And that's basically what happened last week with Meta. They spent, more on AI and kind of affected their overall earnings growth. And of course, we're not yet seeing profits out of that expenditure. So they got to kind of squeeze that in. And this is a good time to do it because we're seeing pretty good growth altogether. And they can kind of scrape some of that money off the top and put that into this, essentially research and development and build out of these different data center projects. So anyway, that's overall kind of what's going on right now. I don't see at the moment, the overall negatives that are out there overwhelming the positives. That's I don't see it for a little bit. It is possible, believe me, and it's something that I think we should all be paying attention to. It's just that there's a disconnect in the basic time frame. So the negatives that are happening, if they're going to happen, are going to take a little bit longer to get here, and they may never get here, but nonetheless, they're not here today. And so what is here today are these positives that are driving this thing higher, and we'll continue to do that. And again, we're in the seasonality wise. Here's November and December, pretty good time frame for the market as a whole. So don't be surprised to see the market continue to do pretty well. We then do get a dip oftentimes kind of in the middle of December till about the 28th of December. A lot of rebalancing and things that go on at that point in time, but otherwise it's still a pretty good time frame. So look forward to seeing what's going to happen tomorrow, and we will talk to you then. Thank you very much.